All right, so in this swing trade breakdown, I'm actually going to be breaking down two trades for the same ticker that I did with my team over the last few trading days. And this is for Lucid. Okay, so if you don't know what Lucid Motors is or Lucid Group is, they are a up and coming electric vehicle company. Okay, I think the founder or something or a big honcho in their management team used to work with Tesla, and that's part of their success story so far. Okay, but this was not a fundamental based trade at all. The two trades that we did for Lucid Group were completely off of technicals. Okay, the first trade was we took a November 19th 25 strike calls. Okay, so at the time of this video, today's date is October 19th. So we literally put a month plus of time on our side because we wanted to capitalize on this move. And Lucid, if you look at its past price action, it can be a little bit of a slow mover, and then it has its explosive days to the upside as well. So when I saw this breakout coming and this reversal coming for Lucid, I wanted to put time on our side. That way we could capitalize on the upside that Lucid was showing, and we would still end up being green, even though we weren't going to be able to max out on potential profits because we took such a longer dated expiration. So if you're newer to swing trading, there's a downside and an upside to buying so much time. If you buy so much time, you don't have to worry about theta and time decay for your options. On the downside of that, you don't make as much money. So if I only bought weekly contracts for those 25 straight calls on the first trade, I would have made a lot of money at first because I would have been able to capitalize on the high delta and gamma. On those 11-19 calls, the gamma was very low, even though the delta was very high. So it is a little bit of a downside, but it puts a lot less risk on my end, and it allows everybody's emotions to calm down, and we can just let this trade do its own thing, and we can sit back and make money. So the first thing that I noticed for Lucid was this descending wedge on the daily. Okay, so we have a really beautiful classic descending wedge right here on the daily time frame. This is a bullish reversal pattern. Okay, this is a bullish reversal breakout pattern, and we can see price breakout of this of this descending wedge. Lost my train of thought there for a second. Right here on the 14th, and that was the day that we entered, was October 14th. We saw this big breakout coming. I actually caught this move, or I caught this setup, on the 14th. I wish I had caught it a day earlier, because here's what really sold me on this setup. Normally, I'm a big swing trader. I usually enter my positions around lunchtime or later in the day. We entered this trade in particular early in the morning. It wasn't right at market open, but it wasn't long after open. I know it wasn't even lunchtime yet. Okay, what caught me by surprise off of this trade, look at the previous day's candle, October 13th. Look at this buying pressure that comes in. This is a really nice pin bar candle off of the 50% daily fib level. So buyers stepped in off of the 50% fib level. They had the descending wedge going. This was the bullish breakout reversal pattern that was in the works. Buyers stepped in, reverse price off of a key fib level. And then the following day, on October 14th, when we first entered this trade, price actually broke out with a nice bullish engulfing candle, and volume also came in as well. So volume came in pretty well off of the reversal and then on the breakout candle as well. And that is what we like to see when we go long for certain trades. So October 14th, we saw our breakout. Price was below a lot of technical resistance. You can see it was below the 55, the 21, and the 9 exponential moving averages on the daily time frame. So that's a lot of technical resistance up top. But price did a really, really good job of breaking out all in one day and turning all of them into technical support. So in one day, 3 key moving averages went from technical resistance into technical support. That is often a very good indication of continuation to the upside if all of that can happen in one day. We also had sweet price targets to the upside as well. This 61.8% fib level, 2370, acted as our first price target. We met that price target on the first day. So since we met that price target on the first day, we were able to flip to the next fib level as our following price target, which is all the way up at 2576. However, notice how this explosive move came on October 14th. This can continue, like price can see continuation and make higher highs right away. However, it's not always healthy when you get an uptrend moving and beginning that it goes parabolic right away. Okay, you want there to be technical pullbacks. You want there to be some consolidation. That way the uptrend remains healthy and buyers can start staircasing price up. Now, we identified this first trade on the daily time frame, which is the descending wedge. This was the reversal pattern. Okay, now that the trend has reversed because price was downtrending as it was forming this descending wedge, now that price has reversed to the upside, we're no longer looking for a reversal pattern. Instead, what we are looking for is a continuation pattern. Now, I knew this and I told my team this, and I walked them through this setup. And you can see right here, and I'm going to hide my fib levels now because they are a little irrelevant since this trade is now done and over with. These white lines represent the descending wedge that I had drawn on the daily time frame. Now, I told my team this move is going to be a bigger move. It's going to last a few days. It's a reversal pattern. Okay, I mean, price broke out of a reversal pattern. That's a big deal. But there's going to be continuation, and we're going to be watching and waiting for that continuation so we can capitalize on it. And lo and behold, this continuation pattern formed, and it was a bull flag on the hourly time frame. These white trend lines represent the descending wedge. If you notice my orange trend lines right here, that represents the hourly bull flag that price gave us. Here's our flagpole. The flagpole went from October 13th all the way up into the 14th. So this flagpole formed on 2 days. Now the flagpole forms off of the initial breakout that price gives us, okay, out of the descending wedge. But again, if the uptrend is to remain healthy, it's not going to be a parabolic move to the upside. There has to be a continuation pattern. Price has to pull back, price has to cool off a little bit, and then price can take the next leg up. That's what we got on October 15th. Price was bull flagging the entire day, and you can see that right here. The only time that price was trying to force you out if you were in long was the 9 a.m. candle on October 15th, and you can see this long bottom wick right here off of that 9 a.m. candle. But look where buyers stepped in. The 21 and the 55 EMA on the hourly time frame were trading right next to each other. Those are two very strong technical supports trading next to each other. Look at the long bottom wick that came in. There is clear, crystal clear buying pressure that stepped in. Lo and behold, they keep flagging Lucid all day. Now, look at this 3 p.m. candle that comes in for Lucid on October 15th. It's a nice bullish candle. It's not a big candle at all, and I'm going to enlarge my chart here so everybody can see it a little bit better. It's not a very big hourly candle, right? Like we can see these big hourly candles as price broke out. But notice the bottom wick that price gave us. There's buying pressure at the end of the day here for Lucid. Follow my cursor down with me and look at the volume bar. On October 15th, this 3 p.m. hour, during this hour, from 3 o'clock into market close, Lucid saw the most volume during that trading day, more than every other hour on October 15th. That's a very good sign that price is going to continue to the upside the next day. And lo and behold, let me lock my chart back in here real quick. Lo and behold, we get our 3 p.m. candle with a bigger volume bar. Look what happens the next day at market open. Lucid absolutely rockets to the upside. Now at this point, for this second trade, because we saw this was from October 15th. October 15th was a Friday, and we swung weekly 25 calls. So October 22nd, 25 calls was our exact option position. Those 25 straight calls went in the money Monday morning within the first 2 hours of market open because we were able to identify two patterns here. Lucid first gave us the reversal pattern. That was the descending wedge. We looked for continuation. That was the bull flag shown on a smaller time frame, which was the hourly time frame. We waited for volume to confirm. We waited for price action to confirm it for us. And at that point, it was just up to us to execute. And we did exactly that. And we were able to feast this week and into last week as well on Lucid calls. Now, this trade is done and over with, and there's new opportunities available. Don't go chasing Lucid if you're watching this video if you didn't catch this move with me. What my purpose and my goal of this video is to show you opportunities to look for on your own. Okay, this exact setup can be replicated in any other name out there, whether it's Apple, Tesla, NIO, General Motors, whatever it is. Okay, this exact setup and everything that I just talked about, looking for reversal patterns and then price turns into continuation patterns, using technical support to your advantage, using fib levels as price targets and watching how price treats and reacts each fib level. That is what I want my takeaway, or that's what I want you all to take away from this video in this trade recap, okay? And if you are interested in joining me, trade by trade, feel free to join my server. The link is in the description below. And if you have any questions about this and my style of trading or about my team, please feel free to leave them in the comments below. And if you enjoyed this video, please like and subscribe.